Portions of the following program may be pre-recorded.
The following program is sponsored by Max Out Savings Advisors. The views expressed during the broadcast are solely for entertainment purposes and do not necessarily express the views of KNTH, its management, Max Out Savings Advisors, or its sponsors. Max Out Savings Advisors and members of the Max Out Savings team may or may not hold securities mentioned during the show. Plan for your prosperity. Prepare for your retirement. Safeguard your savings. And nurture your investments. This is the Max Out Savings Show with Ted Gioka, a presentation of Max Out Savings Advisors. Now, here's your host from Max Out Savings Advisors, Ted Gioka.
Welcome to the Max Out Savings Show. I'm Ted Gioka, and we're talking savings investments in your retirement here on the Max Out Savings Show. Our show is all about building up wealth, understanding the world today, and protecting your retirement. Our motto and our philosophy is to save aggressively and invest conservatively. That save aggressively and invest conservatively. That's the key to building up wealth over the long term. And you always want to start by putting away as much money as you can as you're working, 10% minimum plus the company match, and then just let it grow tax-free in your 401k, your qualified savings plans. This is the way you build up wealth. At Max Out Savings Advisors, we don't manage 401k plans. We manage IRA rollovers, trust, different types of SEPs, different types of once you leave the company, typically you come to us, and or you have an old 401k, and we manage that. But we always try to start the show talking about these 401k, these different plans, because that's how you build up the wealth. That's how you get to where you want to be for retirement. And it is the Max Out Savings Show, and there's been a savings crisis in the United States. It's not as bad as when we started the show back in 2006. Oh my gosh. In the beginning of 2007, and we were one of the first shows on KNTH 1070 here, and it's we're one of the most popular financial shows in Houston now, because we're here to help you. We want you to sit there and grow your wealth and understand the world today. So here we are. We've been really. I think you have to understand the big picture. We talk a lot of big picture stuff on the show because you have to understand that to understand where you're going to put your money for retirement. Understand, retirement is a long-term deal. If most people, if they retire at 65, they got a good chance that them or their wife could live to be, I think the number's over 50% to 90, I think 91 or 92 years old. But you're looking at least 20, 25 years for most people for retirement. And so this is a long-term game. There's people they're gonna retire longer than they're working, and so you've got to plan long-term. You have to think long-term. You've got to you want to kind of go where the puck. In hockey, was it Wayne Gretzky says you want to go where the puck is going, not where it's at. And most of the financial shows in CNBC, they're all talking about where the puck is at. You want to go where it's going. And when you've got 30 years, you have a long-term time to retire out. In the 1950s, I think the average age from retirement till they people pass away was like 13 years. And since then, it's just exploded much higher with improvements in health care, standard of living. People have much bigger savings. Back then, they didn't have that much big savings. People mostly just lived off of Social Security and some savings at the bank. And so the thing has changed. So we want to understand this is a long-term deal. And so that's why we talk about these big issues. One of looking now, the issues. What are we dealing with? We just have a new president that's come in power. We have a deficit that's been running $1 trillion every 100 days. Excuse me, we're borrowing an additional $1 trillion not refinancing, but borrowing $1 trillion more every about 100 days. Looking at the, let me get some water here. Looking at the, we have $36 trillion worth of debt. We're projected to have close to $40 trillion by the end of the year. Our trade deficit, our budget deficits for the last 5 years has averaged over 6.5%. In the last 4 years, that's 6.5% with a pretty good economy, low unemployment, and they still managed. They were using 6.5% deficits. We're not in a good situation. We're the second biggest thing on our budget thing is now we're right up with defense. The most expensive is Social Security, Medicare, and then defense, and now the interest rates. And I think the interest cost is now crossing to the second biggest thing. We've got to do something. The United States is on the fast track to a hyperinflationary debt spiral, and they have to do something. Something has to be done. People blame a lot of this on Biden. Honestly, I don't. Look, I think Biden, at least particularly the last 2 years, hasn't even been there. I think he was. I think what's starting to come out is there's a group of radicals underneath him that were basically using the auto pen, which was an automatic signature, and just putting stuff out there with Biden's name on it. And I think Biden was basically a vegetable for all practical purposes, and these radicals took advantage of the United States of America. The spending levels and the amount of corruption and graft is unlike anything the United States has ever seen. I think you really have to go back to the rise and fall of Rome to really look and see what just happened in the last 4 years to the United States of America. The corruption was it wasn't in the millions. It wasn't 5-10 billion. It wasn't 20 billion. It wasn't 100 billion. It was hundreds of billions of dollars was basically stolen from the government, either through fake COVID things, bogus grants, or grants given out where to study the sex life of the tsetse fly or something, and they give them a $20 million grant, and quote the administration cost was $10 million on it. So the country is not in a good place at all. Make no mistake about it. You look at these people, you look at the people in the know, they're clearly concerned, and we're headed for trouble. Now, here we are today, the American public, who, as we said on the show, generally gets it right. I don't believe Trump, I don't believe Biden was elected that last term. I think that election was rigged, but that's just my opinion. Other people have others. But and the reason I say, if you look past through history, we usually got the right person. That we had problems with Nixon, and they elect Jimmy Carter because they wanted a straight-laced person that's going to clean up the government. Jimmy Carter proved to be incompetent. They get Ronald Reagan in there, who's one of our most successful presidents. They always seem to get the right person in place. And, Barack Obama, I really genuinely, if you look at Barack Obama, you say, here I have this one-term senator from Illinois. Here's his record. He's associated with a bunch of radicals. He's a really bright guy, but, there's real concerns. But the American people go, no, it's time for an African-American president. This is what we want. We want to put this stuff behind us. They always seem to do the right thing. And so they put Donald Trump in place, shocking to the Democrats, but they misunderstood the American people. American people understood there was something wrong. So here we are today. Donald Trump gets in there. We just talked about $1 trillion every 100 days, 6.5% deficit. Half of the employees in the last 4 years, half of the job growth approximately have come out of the government. This whole thing has been a big, giant government charade that we can't keep up. No one is going to lend us money in the world. Like, you guys are crazy. We don't even know what $1 trillion is. You guys are coming to us for another trillion every 100 days. We're not even sure what that number is. Things are out of control. Donald Trump is stepping up. He's moving very aggressively. Couple things. he realized a couple things. He realizes that he has to get his team in place. You can't go with the rhinos. You can't go with deep state people that have been there, because the minute you get in power and start going, they'll stab you in the back. We saw it with Bill Barr. We saw it with all these clowns last. He gets his people in place. What else does he do? He realized he has to move quickly. A couple reasons. Why is he doing that? Number one is that this crisis is very, very serious. $1 trillion every 100 days, 6.5% GDP, spending people, the Chinese, the Arabs, the Japanese. These people are all selling our bonds. They're like, look, hey, we see what's going on. So he has to act quickly to restore confidence in the United States of America to handle its finances, and he's moving very, very quickly. He's got. He has a remarkable team in place, and so he puts Scott Bessent in there, very, very shrewd guy, understands the big picture. He actually I think he started with George Soros. He doesn't have the same beliefs as him, but Soros has a unique ability to understand markets as good as anyone I've seen out there, and Bessent understands the gravity of the situations. They're moving very quickly. The other reason is they put the Doge Commission in there with Elon Musk to cut government spending. You've got to cut government spending. Look, how can we do this? You got to cut government spending. He's moving very quickly. 60 days. Trump's been in power for 60 days, and look what he's done. I mean, the only person remotely close to him is Franklin Delano Roosevelt, and there were big changes. There's going to be big changes now, but you got to move quickly to keep the establishment and the bureaucracy off balance. Otherwise, they're going to bury you with all types of laws and gumming up everything and sabotaging everything all over the place. But by moving very, very quickly, which is what Elon Musk has done, he's gotten in front of them. So rather than Trump paying defense all the time, we're on the offense. And this is you're seeing these big things being done, big changes put in place. So Trump realizes, he gets in office, he goes, oh, whoa, this is not a good situation. I mean, this is kind of the situation where, you get to be put in charge of the company. You come in there and you suddenly realize the company's deeply in debt. The management before has made a bunch of horrible decisions. There's no money there's no money in the cash register, so to speak, at all. And the bankers are knocking at the door, wanting their money back. And so you got to act quickly. It's the same exact situation in the United States. Fortunately, Trump has put together this team. He's put together J.D. Vance. Rubio would have been a good VP, but J.D. Vance is just world class. He's like Trump. He gets it. He came from nothing, and he understands what it's like to be there. He's got Secretary of State Rubio in there, very strong. He's got Elon Musk, incredible, the brightest mind on planet Earth since Einstein. Okay, we have him on our team in the United States of America. He has RFK Jr. He has Secretary Bessent. He has Pam Bondi. I mean, what about Pam Bondi? Pam Bondi comes marching out there with Donald Trump. Okay, if you'd asked me, said, Ted, Pam Bondi's like, oh, wear a power suit, wear a dark charcoal, come out there. She comes out there looking like a runway model with a white suit, and it's just, again, it's all for optics. It's like, hey, things have changed. We're cleaning this up. We're the good guys. She's wearing white, and we're going to sit there and for our Justice Department, we're going to have only one system. We're not going to have a two-tier justice system. Big changes there. I mean, you could go Commerce Secretary Ludnick, former head of the big investment banking firm. It's just one thing after another. The most powerful cabinet since Franklin Roosevelt. These are big changes. They have to be put in place, but it's causing a lot of problems. And we're going to talk about that after this quick break so you can understand where we're going next, right here on the Max Out Savings Show.
This is Ted Gioka, host of the Max Out Savings Show, one of Houston's most popular financial radio shows, celebrating over a decade on the air in Houston, Texas. With stocks at record high valuations and interest rates near record lows, you need to have your guard up. You need to have a plan to manage risk to your retirement. Do you? At Max Out Savings Advisors, we have a risk-based value investing approach to your retirement. If you would like some help managing your retirement, go to maxoutsavings.com to set up an appointment. That's maxoutsavings.com.
I'm Sam Malone, president of 512 New Media. We're Houston's leading marketing and content creation firm for many reasons. Our assets are exceptional, from video production to web design, strategy, and the ability to say no. Saying no is integral in launching a successful, profitable campaign. For example, take a look at Memorial Day. It's a federal holiday set aside to honor and mourn those in our U.S. military who died while serving our country. I'll say it again, for those who died while serving our country. So how does having a sale work in unison with the reason for the day off? Look, we know people will be at the beach and barbecuing and having parties. We would probably say no to launching a Memorial Day sale. So is there another way to commemorate the day while marketing your brand? Absolutely. And from our experience, the same holds true with Easter Day sales and MLK Day sales and Christmas Day sales. That's why we're different. No cookie cutter, follow the crowd, template marketing. Let's talk. We're 512 New Media. 512 New Media. With better marketing comes better value, creating better results.
Once again, here's your host for the Max Out Savings Show, Ted Gioka.
Welcome back to the Max Out Savings Show. So we're just talking about the economy. What we're talking about is Trump. Trump's coming in there. He's making big changes. And I just rattled up. I forgot Tulsi Gabbard. I mean, it's just, I was talking about his cabinet is unlike anything we've ever seen. His Middle East negotiators, his other people he's putting underneath these people, it's just very, very strong people that know what they're doing, that are very capable, that have great track records. He's got billionaires in his cabinet, and they're all coming in there to help him out. They see these people are smart people. They see if we don't do something, the United States is headed, as I said, for hyperinflationary debt collapse, which will wipe out the standard of living in the country. And Elon Musk he wants to go to Mars. You're not going to Mars if you're in a depression. Rest assured. And so he understands this. So they're making the big changes. They're moving quickly. But a couple of things are happening out there. This isn't going to be all just a bed of roses. It sounds all great, but look, Secretary Bissett, as we talked about on the show last week, and we've been talking about this. Well, we've been saying since the beginning of the year, the economy is going to slow. You want to be cautious. You want to stick with the precious metals, commodities, and I think we're doing we've done quite well in kind of keeping you ahead of things in here. But what we're looking at is Secretary Bissett. He made some comments. We talked about this show last week, but I want to reiterate because I think they're very seminal comments. There's times when secretaries say things. I think it was John Connally made the crack about the United. The dollar was I think it was falling. I think the dollar was falling at the time, and John Connally comes up and what about the dollar? The dollar's falling. He says, yeah, if the dollar. That what are you guys going to do about it? He said, well, the dollar might be our dollar, but it's your problem to the Europeans. And it was a seminal moment that people understood that they're going to all have to pull together to help out here. Bissett made some comments like that. He said, look, he talked, I believe it was in New York, and he made some comments. He goes, look, we have these huge deficits. We have these huge problems. We're restructuring things. A couple of things he said. Look, Wall Street's done real well over the last 2 years. You can't expect, the markets to go up forever. We're here to help the working class people in the United States of America. That's who this administration represents. He also said the U.S. economy has been addicted to government spending. What did I just say? 6.5% deficit in government spending. Half of the hiring has been government employees over the last 4 years. the economy is going to go through. We're going to go through a detox period. Because if you're addicted to something, the detox is not fun. So they're kind of warning you that, hey, look, we're coming into a possible slowdown here. Look, we're not going to be, the remark about Wall Street is like, don't expect us to come rescue the stock market because the wealthy people in the country are doing well. 50%, this is amazing. I'm going to repeat this from the show last week because it amazed me. 50% of the consumer spending is coming from the top 10% of the consumers, which means the people at the top and their stocks are doing well. They're rolling in money. Things are going well. Other people underneath them, they have inflation is coming in. It's benefited stocks. It's not benefiting working people as much. And so don't expect this again. It's like, hey, don't expect us to help you guys. We're here to help out working people, and this is important. Look. The elite class up in Washington D.C. in the World Economic Forum people, they tried to take Trump out. They tried to do everything they could to destroy Donald Trump, and they came very close to do it. It's a miracle. It didn't happen. I mean, the real miracle was the assassination, and was just extraordinary. And Donald Trump has huge numbers of very wealthy friends. They couldn't save him. Everyone was afraid. The working people are the people that came up and supported Donald Trump, and he knows that. That's where his support is, and that's going to work. What is he saying now? Commerce Secretary Resnick is out today talking about this, or yesterday. Look, we're going to try to make it so people under $150,000 don't pay any income tax. So again, these are big changes, and so a couple things I want you to understand: when the market sells off, and that we're in a transition period, it's going to be a detox period. We were addicted to government spending. The spending has got to get cut back because no one is countries around the world are cutting back lending. They're not going to lend us any money if we can't afford this, and interest rates are going to skyrocket, and we're all going to be toast. So we have to make big changes. We're making cuts in government. We're going to try to right the ship here. And we're going to help out the middle class. We're not going to come bail out Wall Street. We saw this week. Everyone keeps hoping for a Trump put. It isn't going to happen. He'll say a few positive things, but they want interest rates down for working people so they can afford cars, they can afford homes, and things like that. And so that's where they're going. And so that's happening. Now, the other thing that's happening is a slowdown out there. We just got the consumer price numbers coming in. So we got big changes coming up. We have a team in place that is world class, unlike anything since FDR, best in 100 years. They're going to implement the changes. They're moving it with extraordinary speed to get things done. But we're in a detox period, so the economy is slowing down. Now, the Michigan consumer confidence number fell to 57.9%, almost a 10% drop this week, as people are worried. There's a story in the Wall Street Journal: shoppers curbed convenience store spending, and spending is dropped. Big ticket items for Home Depot, places like that, they're dropping off. Airline tickets. There's a steep drop in demand. Ticket prices are falling. There's a real drop in airline ticket demand, and this is another kind of thing. A lot of people, particularly young people, travel all over the place, and I think some of them travel more on a plane than they do a car. But So that's all starting to slow down out there. The consumer's slowing down. Now, it's slowing down a little quicker than I thought. If you look at some of the numbers, the consumer confidence for Democrats is like 30%, and the Republicans like 70%. A couple things are happening here. We're dealing with the genuine slowdown in the economy because what happened in the last 2 quarters of last year? The presidential election. Well, Joe Biden, some of the numbers are saying that they spent $250 billion they pumped into the economy to try to make the economy look good, so people he would go, oh, well, the economy's good, let's reelect Joe Biden. Well, that hangover is now hitting because the spending is ending. And so what that is that is a situation where the spending is dropping off. The other thing that's happening is the inflation has been digging into people's pockets. It's hurting working people. And the third thing, which I think is not as well understood, is the Democrats are all running around like it's the end of the world, and they've got their base all terrified they're going to lose their jobs, and Donald Trump is the end of the world, and he's Adolf Hitler and everything else, and they're scaring the Democratic voters, and so they're not spending as much money. But this is this drop we're going to go through to get out of it. Now, coming out of this over the next couple months, we're going to get tax cuts. We're going to get tax credits for building factories and things. We're also going to get a cut in regulations. So when these regulations get cut, people go, well, maybe I'll build a factory there. I talked to my cousins up in upstate New York, and I'm like, guys, why don't you? I said, I'm amazed. It's such a nice city. They're from Rochester. It's such a nice city up. It's gorgeous. They had like Xerox, Kodak, Bosch and Lomb, Gould Pump. The list just went on and on of factory of. They had more PhDs in Rochester than anywhere in the country, and it's gone downhill. And I'm like, why don't you get more factories? And they're like, Ted, nobody wants to build a factory up here because the New York's regulations are so horrible that it's just you can't build a factory. I'm like, you should, y'all should start a movement and basically split the state in half. But they wouldn't do it. But I tried. But it's the rules and regulations to put factories, pipelines, and other things are so onerous that it takes time. There's all this environmental. All this environmental regulation, which, by the way, I support a lot of it. But the problem with a lot of that environmental regulation is you have to do an environmental assessment. Okay, fair enough, you do it. And then what happens is these organizations sue, and then they have to go back to court, and it takes 2 or 3 more years to get anything done. So it's a combination of regulation and limiting the amount of appeals. So no one's talking about going back to the 1960s, when there was smog over all the cities, and it was just a disaster. You couldn't swim in the rivers, but you have to be able to do things without regulations in the legal system gumming up every time anyone puts in a plant and equipment. They're going to cut those back. So people are going to start building in. So what has President Trump done? He's got $500 billion, $500 billion worth of factories coming into the United States. People making commitments for investments of all types from overseas. Apple, I think. It's just the list goes on and on. He's putting in tariffs in place because he's making it clear to these people, look, we're not going to let you build everything overseas and trot over and bring it into the United States and not have any jobs here. So that we have new factories coming in. We have tax cuts coming in. We have people hopefully under $150,000 not paying any income tax. We have tax credits. All of these things are going to get the economy going later this year into next year. But right now we have the slowdown. So this is why we're seeing this big sell-off in the stock market. Now, hopefully, you had cash defensive levels that we've been saying. Hopefully, you were in some of the sectors. There's a number of sectors that did well. If you look at natural gas is up 32%. The oil gas stocks have held up. Silver's up 16%. Gold is up 12%. Lumber is up during this time. This is year to date. The stock market is down. Depending on it's down about almost 5%. 4 or 5. It's about 4%. I got a couple numbers. One of the numbers is just the futures is down almost 5%. I think if you add a little dividend in there, it goes a little less than that. Closer to 4%. It's down. The Nasdaq is down 8% year to date. So there's been a big fall in the markets in here. But if you're in the right sectors, as we've talked about on the show, you did pretty well if you diversified. We've been saying, for a year now, don't look these big Mag 7 stocks. This is the top of these things. Their valuations are absurd. They can't withstand them. When it goes down, they're going to go down quick. That's what we're seeing. A lot of hedge funds are losing money out there, and because they're all in the same stuff and they're all trying to get out. I don't think they've all gotten out, and I think this thing is going to take some time to work through the system. I think you should get some type of rally in here, but we're looking at an economic slowdown in here. It's not any fun. People, have been through layoffs in big companies. They all know it's not any fun. It's kind of a disaster for the company. It hurts morale. It hurts productivity, and then ultimately you kind of turn things around. Look, understand the government. It's been 30 years since anyone really seriously tried. Clinton actually tried to restructure the government and do something. It's 30 years. I mean, show me one single major company that hasn't gone through a restructuring in the last 5 years, never mind 30. And so there's an incredible amount of waste and bloat in these governments. And the big shock on the whole thing is actually remarkable. The big shock in the whole thing has been the amount of just sheer corruption. I mean, I don't think anybody really, and if you talk to them, what surprised you? They're like, it really seems to be the scale of the corruption. I think we're going to get final numbers eventually, but evidently there's there's fraud in the Social Security system. Every dime someone's stealing from fraud in the Social Security system is less money that you're going to get in the future. They're basically taking it from retirees is what they're doing. Enormous fraud in Medicare, Medicaid. The grant system and the USAID was honestly the biggest grift system in the world. As we talked about, we should have all figured this. This shouldn't have surprised anybody if you just look. And I think it's 6 of the top 7. I think it's zip codes or wealthiest zip codes or counties in the United States are around the top 10 or around Washington D.C. I mean, if any of us had really thought about that. Yeah, they really would have figured out what the hell is going on in Washington, D.C. And I think I quoted that statistic over the years. And I kind of said, hey, wasteful spending, these guys are getting – I had no idea. And I think I studied this thing. I think I'm very sophisticated. I had no idea the amount of grift was really going on up there. And I think no one else did either. And so – but I want you to understand, this takes time – to take this out. This is why we've been saying since the beginning of the year here on the Max Out Savings Show, look, we're coming into a slowdown. You're going to see a slowdown. All that election spending from last year is stopped. There's not going to be, so there's less spending. And then now Doge Commission comes in. He wants to cut 5 to 8% of the employees out there. That's a big thing. They're aiming for over $1 trillion of savings over the next couple of years. That's got to come from somewhere. And so that's going to slow the economy down. So this is what we're looking at. But in that time frame, again, if you look at some things, there are some things that are going up. If you look at we talked about I'll tell you what, we're coming up just about here. I've got to coming up on a hard break in a minute. I'll catch that one in the next segment. So again. Remember what Secretary Bissett said, this is a detox period. That's kind of letting people know that it's not all going to be rosy. They're not counting on this. We haven't even done half of the cuts coming in. I have people call me up and Ted, can you talk to Congressman so and so? They rattle off some real things that are just stupid. Some people are doing out there. They just can't believe how much they're wasting money. So it's just all over the place. They're still going to get to they haven't even hit the medical area yet. Medicaid, Medicare, the drug industry. They haven't hit that. They haven't talked to the to the Defense Department, to the defense contractors. They're next on, because remember what Donald Trump did with that Boeing plane. He got them to cut the price like $1 billion. They're going to go back to these defense companies and these other people and say, look, we can't keep paying $150 million a plane. We need to cut this. there's ways they can do it. They can go, well, if you get rid of this regulation, we can get changes there. There's ways they can do this. If we can make these things simpler so they're less complex, less failure prone. So you're going to see big changes because remember, Elon Musk, this guy builds rockets. He sends up 90% of the payloads on planet Earth into outer space. Something to think about that. So this is just getting started. It's just been 60 days. It's exciting. Things are really happening. This is positive. We're going and we're turning the country around. It's an aircraft carrier and it takes time. We'll be right back after this quick break right here on the Max Out Savings Show.
The Max Out Savings Show with Ted Gioka will return shortly. To speak with Ted Gioka now, call 713-339-1070. Back in a moment with the Max Out Savings Show.
Hey everybody, Charlie Kirk here. Ted Gioka, the founder of Max Out Savings Advisors, always says, save aggressively and invest conservatively. He specializes in helping people grow their retirement account with as little risks as possible. Ted combines working knowledge with the intuition gained from over 25 years of experience of value investing in the stock and bond markets for retirement accounts. Like you, Ted is deeply conservative in life and in his investment approach. His risk strategy allows him to anticipate market downswings to protect your money. Ted is also the conservative host of the Max Out Savings Show. You can listen to him every Saturday morning at 10 a.m. right here on The Answer. If the idea of saving aggressively and investing conservatively appeals to you, the best way to get to know Ted is to call him. The number is 713-627-0400 or visit maxoutsavings.com. That is maxoutsavings.com. Call Ted right now, 713-627-0400, or visit maxoutsavings.com.
Hi, this is Ted Gioka of the Max Out Savings Show. Our motto and philosophy is to save aggressively and invest conservatively. The world is changing at a faster rate than any time in the last 50 years. The investment world has changed. Have you changed? Inflation will destroy your retirement. It is a different world that requires different strategies and ideas. The era of indexing and investing is over. If you need help, listen to the Max Out Savings Show. Our show airs every Saturday at 10 a.m. and Sunday at 7 a.m. We talk about investments, the world, and where the world is going today and help you understand it and help you save money and build up wealth. It's the Max Out Savings Show. And if you need some help, go to our website, maxoutsavings.com. That's maxoutsavings.com. On the website, you can sign up for the free Max Out Savings Report. Our report covers all types of these big issues, the changes in the world, and helps you understand and protect your retirement. So go to the website, maxoutsavings.com.
AM 1070, The Answer.
We return now to the Max Out Savings Show. Here's Ted Gioka.
Welcome back to the Max Out Savings Show. I'm Ted Gioka. We're talking savings, investments in your retirement. Also want to mention one of our sponsors, Rangoni Alto Gin. It's a botanical gin, all organic, natural botanical gin from the Italian Alps. It's got actually probably, I think, the finest profile of a taste profile of a gin out there. And if you get a chance, try it out. It's Rangoni Alto Gin. Look for the kingfisher bird on the label. Now, the talking about these markets here overall, it's just, so where do we go from here? I think we're going to continue. Look, I think we're in a bear market, so it's going to take some time, and I think we're going to have some type of bounce here, and then I think we go lower, and I'm going to expand upon that in just a minute. But first, let's take a call from Charles. Hey, Charles, to the Max Out Savings Show.
Good morning, Ted. I had a question to ask you. A couple of years ago, and this is before President Trump, obviously, the people weren't even thinking whether he was going to run or not. I used to hear many advisors advise people who had 401ks or large IRAs to go ahead and convert them over to a Roth, and the thinking being, especially those that were near retirement, to convert them to a Roth, because the thinking was that the Trump tax rates were going to expire. Now, if President Trump ends up, and it seems like he's got the momentum. I mean, I think most of the Congress and Senate and everybody, I think, are on board with passing this, or preserving the current tax rates. Assuming this bill passes, in your mind, do you think it still makes sense for someone in retirement or nearing retirement to take their large IRAs and 401ks and convert over to a Roth and pay this several hundred thousands of dollars of taxes? Or do you think it would just be better to just stay the course and just do what you normally would be doing?
Yeah, that's a good question, Charles. I think a couple things. The advantage to the Roth is that you if you conversion, you pay the taxes. So if you have $1 million, you pay the income tax on it, which is probably over $200,000. But then it's a Roth, so you got like $800,000 or less IRA. But it continues to grow tax free. But then the money comes out and you don't pay any taxes on it then. So there's a real advantage to that. In particular, once you've done that, over time, if you need a new car or something, you can pull from your Roth and not have to pay, $40,000-$50,000 for a car, and you're not putting $50,000 on top of your income tax, which at the highest marginal rate at the time. So I think there's some positives there, but having everything in a Roth, I think you have to be a little careful, because I just think in the future it's going to be tougher and tougher for people with really big Roths, because I think they're going to come up with ways like it changes your Medicare cost or something else. They're going to figure out ways to get you to some extent one way or the other. So I wouldn't do all of it. I would do like a percentage of it. And if you want to do that, to so you have part in Roth and part in a regular IRA, I'd be careful with putting too much in there, because understand, I think, look, as we said at the beginning of the show, the country's in very severe financial trouble. And if you see what Trump is doing, they want people under $150,000 not to pay taxes. These are the people that are struggling out there. So the wealthier people, it's going to be tougher. So you want to spread your bets, if that makes sense. Does that help out?
Well, I'm looking at it from the risk standpoint. For someone who's approaching retirement or near retirement, if they were to go ahead and and convert to a Roth, now you've paid this pile of money to the government, and now you're hoping that you're not going to die in 3 to 5 or 10 years. And on top of that, if you go into the Roth, you can't do anything with, as I understand it, the earnings until 5 years later. So now the money's there, but now you can't touch it for 5 years, strictly speaking. And then the other thing is that
the over 59.5.
Right, but what I'm saying is that
59.
is that then going forward, you're now hoping that the market returns are going to be like they used to be, that got you there at the when you built up the million or so. And as you point out, the country's finances and all are such that I'm not saying that the rates of return going forward are not going to be there, but now you're gambling against that. And more importantly, when you go to leave that Roth to your kids or whoever, they're stuck with that 10-year problem, where if they end up earning decent salaries, then they got to deplete that thing within 10 years. So there's some risk to that whole process. And and like I said, a lot of this was being painted back when the Trump tax rates were going to expire and we were going to be going to the previous Biden tax rates. But if that goes away, I'm not so sure that the risk there is worth taking. And in my opinion,
that's true. But keep in mind, true is if it's a Roth, if they inherit it, they got to get it out in 10 years, but they're not paying the taxes on it.
Well,
And
but does it not affect what if they got to deplete that thing? Doesn't that flow to their AGI? I mean, it's income, right? I mean, I would think it's.
I don't. I'm not sure. I'm not a tax person on that end.
Well,
I'm
thinking that it could be, but I mean, if it isn't, then that's one thing. But if it is now, in addition to these people, if they're professionals and both say parents are working, you got a doctor and an engineer or an accountant or whatever, and now they're pulling down $400,000 or something collectively, and then now you're going to throw in an IRA or 401k or whatever that they got to deplete each year. They got to pull money from that. It would seem to me that they're going to be in a very, very high tax bracket each year, and I don't know how you get around that.
In that case, you'd better off doing the Roth. I mean, look, I think I've not seen a whole lot of Roths. I would do them sparingly, and I think part of it in a Roth and part in IRA is a good idea to kind of split it, because I'm not convinced what the taxes are going to be in the future. That's the one thing I've always said is I'm like, the country, as we said, is in bad financial trouble. And so you never know what's going to happen. But, I mean, I think there's a good question. Yeah. I think you got to sit down and analyze your situation and really look at it. But and we see a lot of people just can't stand writing the $200,000 check or whatever. It's just
that's right, because that's a lot of money that once it's gone, it's gone. It might be better to dribble it out, just like what you originally got into the thing for. I mean, and that's how I'm kind of looking at this. But I mean, I was interested in getting your opinion on that and see.
It goes back and forth, but a lot of times it comes down to people just can't part with the money, the taxes on it.
Right.
But good call. Thanks, Charles.
All right.
Yeah, I mean that's the Roth convert your IRA to a Roth, which grows the same as an IRA, but when you take the money out, it's tax free. So there's some real advantages and disadvantages. We don't see a whole lot of them, surprisingly, but it's a good way to go for particular situations. Now, market's here. I mean, it's been, as we said, market. We've been very fortunate by our clients, but the market is down. The Nasdaq is down almost 8% off the top. That's just the beginning of the year. That's not the top. The S&P is down 3%. It's pretty much been a disaster for a lot of companies out there. A lot of stocks are up way more than that. Look, there is so much money piled into the markets, the U.S. in particular, even more so than the rest of the world. You've got the trade war, the tariffs happening. It's going to hurt their profits. Inflation's hurting their profits. The consumer slowdown is going to hurt their profits. And so I don't think the liquidation is over in this market. I think the liquidity is really gone out of the market. I think we really should get some type of rally in here, but I almost think you've got to be very careful with any rally and choose wisely, because I think in best case it's going to go down and retest and most likely break it. The real hot stocks, it's been my experience going back to the tech bubble in 1999. I had friends of mine that were big Cisco fans, and they bought it all the way up to $80, and they ended up buying more all the way down to $15. And we've always said it's best not to catch a falling knife. If there's something out in the future in a year or two, a big development coming up with the company, I think you can. I mean, I think Tesla in here somewhere. I don't think yet, but if you look out 2 years with the self-driving and the robotics and stuff, that's kind of another growth area. I'm struggling to see where the growth is going to new growth is going to come from an Apple or a Microsoft or a Google, particularly with Grok. As we talked about in the show. If you go to grok.com, you get Elon Musk politically neutral AI, which is a much better AI than the rest of them. If you start going to Grok instead of Google, it's going to hurt them. So I think a lot of companies out there are going to struggle with this. And AI could be a big boon for individuals because everyone will have their own AI, but it's going to make it tougher for companies as well. And so I just think we've had a massive run in the markets over the last 2 years. We're in this period of a detox, according to the Secretary of the Treasury Bessent, and I think you still have to be kind of on the sidelines with higher levels of cash to do things, short-term bonds, those type of things. The precious metals, I mean, it's tough to see gold. Gold can go high. Gold's at 3,000. It's a little harder to buy the gold itself right here. I think silver's a better buy. I think the gold and the silver stocks are still lagging. I think you're going to see their earnings go higher here. I really think they should be much higher there. Copper looks good. Electrification of cars, the AI, it's one thing, more electricity, all that requires huge amounts of copper. Copper's going higher. We like the commodity sector overall. But I think you've got to be very shrewd in this. You have to, as we've been saying, you have to diversify here and around the world with your assets. You have to be in commodities. We've been short-term bonds. We've been saying that, the 60-40 stock split in the United States is, S&P 500 and some bonds is not going to be the future. We've gone through decades where the markets have done nothing, but there's been plenty of money made in those decades, and I think we're in one of those decades now. And it's just all going to take time. These things with Trump are incredibly positive for the United States of America, but it's not going to be easy. This is a restructuring of the United States of America. It's going to take time. So, don't lose hope. There's a lot more stuff coming in. Trump has got the best group of people I've ever seen in government ever. I mean, nothing, FDR. It's exciting, but it's going to take time. And so you want to be cautious. And there's a lot of people still stuck in this market with big losses. They're trying to get out, and every rise they're going to probably sell into it. So a couple thoughts there. We're going to write about this in our Max Out Savings report. If you're not on the list, it's a completely free report. We don't call you. We don't do anything. It's just we send out a report once a month. Go to maxoutsavings.com. That's maxoutsavings.com. Sign up for the free report. And you can also request an appointment with me. We've been pretty busy. We've had a lot of people coming in here recently. If you need some help with your retirement, that's what we do at Max Out Savings Advisors. We hold the assets at Charles Schwab and have them, and we manage them for you. So just go to our website and you can request a free appointment, and we'll look and see how you're set for retirement. It's maxoutsavings.com, but a minimum sign up for that free report. And also, remember our motto in philosophy, which is to save aggressively and invest conservatively. That, my friends, is the key to building up wealth over the long term. See you next week right here on the Max Out Savings Show.
The Answer.
AM 1070.